Morning, ladies and gentlemen. This is an analysis of carnival stock.
And finally, the cruise lines.
Okay.
They're looking to set sail this summer, but of course that's waiting on this.
They expected to burn 650 million a month for 2020 second half. Okay, so I did the analysis from its all these figures are from the Q10, 10Q and the 10K. Okay, the available liquidity is 7485. Okay, all these figures in million. Current debt is about 9240, so they have a deficit of 1755. Okay, this is as of May 31st. Okay, so the estimated cash burn until January 2021. Okay, we have to assume January 2021 because of the current situation that is not looking good. Okay, we estimate the cash burn to be 4550 until January 2021, from May 31st to January 2021. Okay, so the debt that is needed, right, to cover all this is about 6.3 billion. They already taken 5.2 billion in debt as of May 31st. Okay, so the total estimated debt, long-term debt, would be about 11505 million. Okay, so it's about 11 billion. Okay, from there we assume 9.5% interest rate. This is the additional expense they have to pay, right? 9.5% multiplied by the estimated debt. Okay, so this is post recovery. Let's say they managed to earn about 3 billion a year annual. Okay, this annual net income. Okay, before you minus the additional interest, so but you have to minus it, so we get an estimated net about 1907 million a year. Okay, and we divide it by the number of outstanding shares as of May, which is 782 million shares. We get 2.43 per share, right? The earnings per share, $2.40, $2.43. Okay, the previous PE was 10, but the debt ratio, because it's so bad, okay, I will reduce it to 8. Okay, so I would value it at 19.5. Okay, but I will assume a 15% margin compression because of the additional stuff measures that they have to take and all that, cleaning and all that stuff. Okay, this is the middle range. Okay, so if we assume 3 years recovery and we use a discount factor of 12%, why is the discount factor so high? Because of the bond yield, right? The bond yield is trading about 9%. Okay, so I assume the discount factor because shares are more risky than bonds. Okay, so if the bonds are yielding so high, so we want to earn more than the bonds, right? Otherwise we will just buy the bonds and less risk, so we assume 12%. Okay, so 1 year recovery is a bit too optimistic, right? 2 years is not quite decent, right? 3 years is pretty safe. Okay, so it's about $12. Okay, the valuation of CCL now is about $12. Okay, and this is assuming that it will be allowed to sail at January 2021. Okay, of course if it goes earlier, it can sail at December or November, the figures change. Okay, the figures change, all these figures will change, keep changing, because it's so hard to do a proper estimate of CCL's future, right? Because we don't know when the situation is going to be resolved. If suddenly there's a vaccine out and the vaccine proves to be working, then then maybe in a year they will recover, right? Okay. And the margin compression wouldn't be that high. Okay, it may even be maybe only 5%, right? We don't know, right? So, or even maybe there's no margin compression, right? They just require the passengers to take a vaccine before they come in, right, and show us the proof of the vaccine. So everything is uh, everything is not static. It always changes. Situation keeps changing. Every stock is like that. Okay. Now, there are things that I never mentioned here. Okay, Euro trips, right? Euro trips, because we heard the European areas, they are already doing very well. They managed to control their numbers. So what we see here is they may be open in August, so it may help with the cash burn, right? Okay. In his example, I assume there's no net refund, right? So if there's net refund, so uh, more debt is needed, right? uh, Delays increase because they need maybe each patient need to have a doctor's letter, increased scrutiny, a part of these application problems, cleaning and all that stuff. Okay, so we cannot really estimate the margin compression, how much did they compress the margin. Okay, now every month's delay from January 2021 onwards, right, they will need another 65 million, because we assume a 10% and 650 million cash burn, right? uh, so it translates to 8 cents EPS, right? 8 cents EPS. Okay, monthly, right? They will erode their monthly EPS. Okay, let's say February, then they can start sailing, then 8 cents, 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 8 cents. Okay, they're selling some ships, right? They can help, it can increase cash position. Okay, I heard they only sold one so far, but there's still another 9 ships they can sell, and they can lessen the cash burn. Okay, because no need to maintain, no need to switch on the machine or things like that. I'm not too sure about ships, but I heard they have to maintain it somehow, like switch it on, or like the engine has to be half on or something. Okay, so what is the perfect? I would say I will take the middle range and the optimistic range. Okay, I would say the value is about $14. Okay, this is a very conservative estimate for CCL. A 14% is pretty good. Okay, $14 is a pretty good estimate for CCL as of now. Okay, with the built-in assumptions, assuming sale at 2021. Okay, now right now it is trading at about let's see, $16. Okay, that's pretty decent. It's not too far from the estimate. It's not too shallow also. Okay. um, will there So this is a very optimistic price. Okay, so $16 they are assuming a lot. So they're assuming a 2 year, they maybe assume a 1 year recovery. Okay, with 10% margin compression. Okay, that's what their assumptions are. But my assumption is $14. Okay. What do I think potential play in this? I don't see it going bankrupt. Okay, I don't see it going bankrupt because of there's a lot of there's a lot of good news, right? Especially the latest remdesivir. All these studies they help, right? So I don't think this company will go bankrupt, but they will have a severely reduced EPS even after recovery because of their debt burden. Okay, they didn't really issue a lot of debt, to tell you guys the truth. Not they didn't really issue a lot. So what is my take on this stock? I am pretty neutral because the stock is not widely overvalued, also not widely under it's not widely overvalued, it's just overvalued by a little bit. It's only about 10% plus. Okay, so I am not too keen on this stock, to short this stock, not very keen. Okay, nevertheless I will short it if it goes up to 17. Okay, I will start shorting it if it goes up to 17. If we look at the 1 month figure, okay, don't look at the 1 day interval, we want to look at 4 hours. So we can see that 17 is pretty decent. There's a pretty decent support, okay, at 17. Okay, not support, resistance. Okay, and also 17.68. Okay, of course if it goes up to 19, that will be the best solution, for the best time for us to short. 19, 21, 27, this is too expensive, guys. This is very expensive. 27, no, that's definitely a no. That's definitely a no. Okay, so I would say it will reach until 21. That's it, 21. Okay, 21. That's the most it will reach. But you guys want to short, you can start shorting from 17.68 or 17. Okay, do I think the numbers will go up a lot or not? Well, I don't know. It's $20. This is crazy, man. Okay, this line is a bit crazy if you think about it. What do I think? Well, I would say we want to look. We want this kind of ups and downs. Okay, with this $20. Yeah, why not? Okay. What do we think is going to happen? The news was pretty significant. Okay, the remdesivir's use. Okay, I believe it will go up. Okay, but on the other hand, some states are pretty close to relocking down again, right? Even the Texas mayor already said, hey, if this trend continues, we have to relock down, we have to re-shut down the whole thing again and start from square one, right? So that news will be very negative to this stock. Okay, although in the long run I don't think that it's actually good in the long run, right? If you shut down certain hotspots, it's good, right? But it will also prompt the CDC to delay the departure of this. Okay, so that's why we estimate it for January 1st, the sale period. Sailing time January 1st. We didn't estimate it at November or October, right? That's pretty basic, guys. So you guys should also, you know, this is what I mean by combining the fundamentals and the technicals, right? Technicals is a nice way to get price points, right? Hey, when should I enter or to what if I want to short? When should I enter if I want to long, right? 17.08 looks like a pretty decent resistance point. Will I take it? I will take it. Okay. If it goes to 17, I will take it. Now, $16. $16 is pretty close to my estimate. Okay. Pretty close to my estimate. So, I am not very comfortable in doing things that are very close to my estimate. Okay. Why is NCLH valued higher, right? Always, if you look at the NCLH, they always valued higher than the thing, than this one. Okay, because like I said before, NCLH has very small cash burn, about 130 million only per month. Okay, so this guy is huge, and it just even a huge person, they just cannot, reduce their cash burn. They cannot just like suddenly sell their ships. Okay, I want to sell all my ships and get out of it. I want to reduce my cash burn. Okay, so they can't. So they cannot move that nimbly. Okay, they are not that agile. That's the problem with the big companies. Uh, you guys can get all the data from the 10Q and the 10K. Okay, so I assume a 3 billion, right? Okay, so this is a 3 billion income is roughly here. Okay, I think that is all. Okay, good luck in your endeavors. Okay, but see, that's the thing. Okay, in a period of recovery, so everything looks clear, everything is good, there's no more problems plaguing the health of the people. Okay, NCLH is a better bet than no, I mean CCL is a better bet than NCLH. Conversely, if the situation doesn't look as good, NCLH looks better because it can survive longer, right? I did an analysis on this. You guys can take a look. If there is any questions, please do not hesitate to, put it in the comment section. Okay. Okay. Then again, right? It has to raise some more funds. I think it raised about 2.4 billion already. Okay, so it needs to raise another 4 billion. Okay. I think they will get it. They are not severely leveraged. As of May 31st, only about debt to asset ratio is about 60%. Okay, they still can take another 10%. I think it's not that super hard for them to do it. Okay. I think, do I think they will survive? Yes, I think they can survive this. Okay, if they are smart, they are able to survive this. Okay, what did I not calculate inside the thing? The calculations is certain stuff wasn't calculated inside was excluded from the calculation, right? This is May 31st. Okay, they have 7 billion of cash. I did not estimate about the interest on this short-term borrowings. Okay, the impact of this, I didn't put any interest expense to them. Okay, I only put interest to the additional long-term debt they undertook. Okay, additional long-term debt, and I didn't include this 956 million. I didn't, give any interest at all for them. Okay, that will be all. I think I covered almost every aspect of it. uh, will I buy this stock? I will buy it if it drops under 11.8. Okay, no, I'll buy it if it drops to 11.1. Okay, uh, I think 2 years is actually pretty optimistic. To tell you guys the truth, it's a bit too optimistic. So I think 11 years is my, okay, I buy this, I am pretty safe, I will get a 12% interest. Okay, I would assume 3 years, but then again anything can happen, guys. So yeah, like I said, it's always changing, it's never static. Okay, thank you so much.